So I'm in this 6B, up 1.7R as it stands on the bid. If I were to get out now, I'm going to look to take 1.6, which means 85. Get out at 85 because in 2 minutes we got consumer confidence, which is a 2-star out of 3-star event, news event. Plus there's some technicals going on here which make for a problem. I'm not going to explain now just in case I miss the exit, but there's some technicals that we can go over after that suggest that it's running out of steam here. So I'm going to trail the stop to 85. So that will be, as I said, 1.6 R, which is nowhere near what I was aiming for, but we have news and it took time for this to get going. And I just don't fancy giving back all of this, as I said, with the combination of the technicals and the news, which is coming out shortly. So I'm going to trail. If it goes in my direction, that's great. If not, 85. Okay, so now I'm going to move to 85 and see what happens. So the news is going to come out in 25 seconds. So I'll just pause the video for now and then flip it back on when that news comes out. I have a feeling it's going to come. Just for slippage, I'm going to go to 86. There's the news coming now. It looks like. Hold on a second. Okay. Yeah, there's the news. Dancing around. Could have got 94, would have been nicer, obviously. It blipped up there, so we'll see. I just don't fancy the way the price action's moving here, so I'm going to trail. Just in case we get some slippage. I'll be happy with 87. Okay, that's the trailing. So if it slipped 2 ticks, then I'd still be at 85, and I'm going to leave it there for now. So we'll see what happens with this. I'm going to pause for now. Okay, out for 1.7. One point we got in at 69 and got out at 87, so at 1.8 I think. Let me just check. Yeah, that's 1.8 there. Now I could have held on, but simply because I know volatility can come in on these news events, and as you saw, we did get a split in the spread, and you just don't really want to have it whip down and whip you out with slippage, so that's why I did that. So what did I see on this? Apart from the higher time frame, according to my method, I saw this, and this goes back to what I was discussing in the latest blog post and all that stuff about trapped market participants and so on. So you had the gap here, and it filled the gap with wicks here, then sold off, came back up, didn't get back to that high, came here, consolidated here as if it was going to hold this low, and then broke down lower, and this is all the trapped longs liquidating their position. Anyone who went long from like here, expecting it to break to new highs, and then they held on when they saw that it didn't quite reach this high, and tried to just hope, and then had to okay, yeah, back. What was I saying? Yes, so we went up here, filled the gap, came down. People who wanted to get long, especially off of this failure here. I'll get the pen up. Just a second. We had 1, 2 here, and then a breakaway. This is what I call a chop to knot on volume, where the market slowed down in 2 waves and then gave way. That becomes a form of support. So people, eager longs, got long here with some wiggle, expecting it to break to new highs. It held this falling gap or rising gap, whichever you choose to call it in candlestick lingo. Technically speaking, it's a rising gap, I suppose, because the trend was going up before. But then the upper side of the window held with wicks, came down. Those who ignored this scenario here got long here, expecting it to break to new highs. It didn't. And then this is where they started to liquidate under here, as we had another chop to knot here that coincided with this one. It's a little higher, but for all intents and purposes it's in the same zone, and that gave way and came. So when I got my first signal here, but as per the blog example, I think it was the blog example or video, I can't remember where I mentioned it recently, but I was very tempted to go long there at 280, and I understood that the momentum, the flow, the order flow was against me because of this scenario that I just explained. So I had to wait, and then that gave way, and then we had a secondary signal down here, and a trap, which I'll just zoom in and show you that. We had a trap as well, in the sense that you're looking for a change in polarity. So here you've got down candle, weak up, green candle, strong full-bodied red candle down. So nothing either way. And then you had this this shooting star, but it's not really shooting star-like candle, but in a downtrend at the bottom of the downtrend. So you'd expect that to continue, and when it broke the low and then closed back inside with a wick against it, that was the change in polarity, and that's where I went long at 69 here. Held. Each one of these candles are 5 minutes. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 5-minute candles. So like, 100 minutes, an hour and 40 minutes of nothing, and then boom, it took off back this way. And this is what I was expecting, that this is the low of the appendix, and that it would take off here and then put in a B, what I call a B of the appendix. So here's A, where some eager longs, and myself included, would have taken a long here, dropped down, found support down here, came, chopped its way to the low of that candle, and then took off here, as you can see on this green candle. And so now we've got the situation where it's looking to hold that support area here. And if that happens, you could go long again, but I'm going to save my bullets for my ammunition for 6J, which I'm looking to trade later today if it does get down. It's currently at 539. I'm looking for, let's see, I'm looking for around about 19.5, 20, anywhere from 27 and lower. If the price gets down to about 27 here, 527, then I'll start looking for entries long off of 6J. But aside from that, I've got nothing else cooking, and I just thought I'd share that little live trade with whoever's interested. So see you all in the next video. Bye for now.